עכשיו.
זה בדרך. זה, כן, מתקרב. כן. אפשר להוריד את המצלמה קצת? זה כזה נמוך כזה, אפשר לתת לה זווית.
תביא לזה.
אני לא רואה את המסך פשוט בלייב, אז אני...
תראה זה פה.
כן, כזה, תתלה את הפעם. כן, זה הרבה יותר טוב.
Okay, we are live. We are live. Hi Vlad, how are you?
Good morning. Good morning. I'm doing well, thank you.
Morning to you. So I'm pulling up the slideshow now. So we'll just wait a little bit more, give people some more time to join. We're also going live on YouTube. We have people joining us in the audience. We have some guy that people are joining in and they need to be muted. Please mute yourself if you join in as a guest. Like I know a lot of people join in as guests instead of the audience, which is cool because you'll be able to ask questions later and interact with us. Before the first half, you know, let's get it on mute. Let's Vlad and I have a quick chat, and then I'm sure there'll be a lot of questions because this is one of the most dynamic space sectors in the most dynamic, you know, industry. The regulation side of it is moving really, really quick around the world, and there's no one better than Vlad to run us through it and help us understand and make sense of it all. So maybe Vlad, before we start with the presentation, why don't you, give us a little bit of background about who you are and what kind of primed you to for this moment to be in this fast-moving regulation compliant space in the digital asset industry.
Sure, thank you very much. So yeah, my name I'm the Chief Compliance Officer for the entire INX group. I'm also the Chief Executive Officer of INX Securities, which is the broker that an ATS that does the token offerings and the secondary market trading of digital securities. I've been doing compliance for close to 30 years and with this firm in various iterations since 2013. Around 2017 is when we first started dabbling in the digital security space. We became the first entity to ever do a secondary market trade of a digital security in November of 2018. And since that time, the challenges of trying to fit ourselves into a box of regulation that at times does not exist. That makes for and lots of interesting decisions and interpretations that you constantly have to make to stay on the right side of the law, which I'm happy to say that INX has always been. So I look forward to discussing this presentation and taking any questions you guys might have about the whole process.
Thanks, Vlad. So Vlad is, I work closely with Vlad in that, because as he said, INX has always been on the right side of the law, and part of that is making sure, any communication, any piece of content we put out there, it has to go through a rigorous compliance process. So Vlad, I've learned a lot from you in the last 3 months, but not just what you can and can't say in terms of compliance, but in the whole, what the whole regulation presentation that we're going to be going through today. So thank you for that, Vlad. I'm going to be sharing my screen, so we'll be able to kind of see. I'm just going to, let's just get this up and down, up and running. Vlad, if I can ask you, I'm also going to turn off my camera so we can just see the presentation. Alright, sorry, I was on mute as well. I muted myself instead of muting. I muted myself instead of muting the please, if you're on this call, for some reason, can you, so for some reason, the call is in a way that some people are guests, so please, if you're a guest, if you join the call, please mute yourself. So I'll continue with that. We'll go back a little bit. Contagion risk, we saw in 2022 what happens when the domino effect, the snowball effect, where one firm collapses and how that leads to multiple collapses downstream. And hopefully we won't see a repeat of that, and regulation will have a role to play, you know, in the eventual fixing of the space. So and the regulators are catching up to this development. In 2023, we saw, you know, just February 2023, just in the last month, in the last couple of weeks, we saw Kraken staking as a service being reprimanded by the SEC. We saw BUSD being reprimanded. Paul Pierce, the truth, the legendary Boston Celtics power forward, who got a fine for $1.4 million for promoting a cryptocurrency, and obviously Do Kwon from Terra fame, infamous Do Kwon, also got charged. So the SEC has been busy, and as you can see, their enforcement actions are kind of taking up a wide, they're taking up a wide variety of use cases in their enforcement actions. What does it take to be US regulated? So maybe now I can kind of give the floor to Vlad. You know, what do you see, how have you seen the space play out over the last kind of 3-4 years? You know, we see that Gary Gensler has been very adamant that most cryptos are securities. So, Vlad, what do you think about that? Like, what should most token issuers be looking out for? Is that really the case that they're securities?
So I think it's pretty obvious, especially in the last year, if it hasn't been obvious before, that things like utility tokens do not exist. So pretty much everything in the eyes of this SEC, which is very, very, very hawkish, is to say that everything is a security unless you can prove to us that it's not. The only exception being Bitcoin. Bitcoin is the only thing that they've affirmatively said is not a security and is going to be subject to secrecy rules as a currency. So you have challenges for existing stuff that's currently out there. So these tokens that are being traded right now that are kind of in limbo, they're trying to figure out are they going to get an SEC action next, or what should they do? The problem is that to take that particular token and make it compliant is quite complicated. There's no clear path to it, and the few that have taken that path, it's been very long and expensive. So I think the challenge and what we would like to see is for the SEC to create a path if they really want to regulate and oversight these security tokens, is to have a path forward for them to become compliant that's clear, relatively inexpensive, and relatively quick. That has not happened. Obviously, the other thing that's been happening is Gensler's been regulating or implementing rules by actions, not by a true rules process where we're supposed to have a comment period and have people comment on the rule, and then they're going to a commission, the commissioners, where they decide what's going on and whether the rule should pass or not, and in what state. That has not happened. The only thing relative to a security token that has come out that's of substance is this 3-step and 4-step process that came out in 2019, I believe, and there hasn't been anything since that no action letter. And again, that wasn't even the rule; it was a no action letter. So the challenges are extensive, but I definitely think that all issuers, all tokens that are out there should be under the assumption that they will be regulated at some point in the future, and that they should plan for coming on board to a compliant platform that is regulated, unless they choose to stay outside the U.S., where that's always been an option in the past for some issuers, but obviously your market is limited because you eliminate the entire United States. So if you want to play by the rules, unfortunately, the rules are what they are. Fortunately for us, while all of these collapses in a way leave us as one of the few operators that are still standing, it's also a black mark on the whole industry. So it's a double-edged sword for us. But as we've always, when we started this process, we take the long view, and the long view is that these tokens will all be security tokens for the most part, and will need to be regulated, and will need to be traded on a regulated.
Cool. So let's see what that means. That all token will eventually be a security. So what is a security? A security. There's a Securities Act of 1933, but the main piece of legislation that essentially defines securities is the security. The Supreme Court ruling in SEC versus Howey, called the Howey test. So why is there a picture of orange trees? It's because Howey was an owner of an orange groves, and he wanted to understand whether an investment into his enterprise constitutes a security. So in order to determine that, the SEC came up with a simple, the Supreme Court, in the SEC ruling, they came up with a simple 4-pronged test of whether something is a security. And obviously in this test, it doesn't mean that asset has to meet all these criteria. Just even if you meet one of these criteria, you're sort of at risk of becoming a security or being classified as a security. So the test is an investment of money in a common enterprise, an expectation of profit from the effort of others. So obviously anyone who's slightly familiar with the crypto world, with ICOs, with utility tokens, you know that this applies to most of them. Most of them have some sort of a token generation event, some sort of a sale. You expect the team to work for you. Everyone's commenting in the Telegram. When this, everyone's very active in the chat. You expect your token to go up. No one buys a cryptocurrency just for the hell of it. People buy it in order to see price appreciation. So that is the basics of the Howey test. And in order to pass the Howey test, in order to essentially, if your asset is a security, in order to make it compliant with securities regulation in the US, you have one of two routes. And maybe Vlad, maybe you can take over now and talk about, the difference between a full IPO route and getting an exemption, an SEC exemption for your token offering.
Sure, David. So as you see up there, there's various exemptions. All of these are actual exemptions for registration. The one thing that's not there is the full offering, which is an S1 or an F1, which is what the INX token actually did. Like the first one, it's still the only one to this day that is been registered with SEC and has gotten qualified. So the quickest and the simplest way for an issuer to raise money and do a token offering would be through a Reg D or Reg S offering. Many issuers do a joint Reg D, Reg S. Reg D allows you to sell to U.S. accredited investors, while Reg S allows you to sell to any non-U.S. investor. There's a simple form indeed that needs to be filed in conjunction with the Reg D offering. With the Reg S, there's nothing that needs to be filed. You can use an entity like INX Securities to be a broker-dealer record. We're registered in all 50 states. We can provide all of the services for you, KYC, AML, onboarding, minting of tokens, provide you transfer agent services, and that is the fastest go-to-market. There is no limit on the amount that you can raise in the Reg D or Reg S, but obviously the limitations are that it can only be to accredited investors and or to foreign investors. There's also a lockup period for Reg D people of 1 year before they can resell their token, and generally 40 days for a Reg S, somebody that's outside the S. The Reg CF offering used to be up to $1 million. They've raised it up to $5 million. Again, that does not require any filings other than the Form C that you just file with the SEC. It's been kind of it was deemed to be a way for some race offering. It's been popular. It's open to all kinds of investors. Doesn't need any accreditation status of the people investing in it. But it, and the final exemption is the Reg A offering, specifically Tier 2, which allows you to raise up to $75 million. However, with the Tier 2, there's two big obstacles. The first obstacle is you need audited financials before you could file. And the second obstacle is you actually need to file with the SEC's department and get qualification. And it has been a challenge for issuers who want to offer security tokens to get qualification. I believe to this date there's been 2 or 3 that have gotten qualified. So the SEC has made it difficult, even though the Reg A is excellent in that anybody can invest, and there's also no restriction. There's no holding period on when people can resell their security tokens once the offering is complete. So those are kind of the options for a security token for an issuer who's looking to raise money. And it seems that the simplest and easiest way so far has been the Reg D Reg S path at this point.
So Vlad, we have a question from the audience before we move on. Someone asked if the Reg CF has a holding period.
Right. The Reg CF does have a holding period, unaccredited investor. So if you're and the Reg CF is unique in that you can self attest. So when you initially invest, you're attesting that you haven't invested a certain amount and or that you're an accredited investor. So at the point of sale, if you say that you're an accredited investor, you get that security delivered to you. You can then resell it with no restriction period. Unless, of course, the issuer puts a restriction period in the offering memorandum themselves, which they have the right to do. They could say that you can't resell it for a year or 2 years, what have it, whatever the case may be. However, the majority of the people that invest in the Reg CF and the purpose of the Reg CF is for people like mom and pop, regular everyday investors who are not accredited to invest. So those investors would have a holding period of 1 year.
Cool, thanks Vlad. So we'll move on now to the rest of the presentation. And then if you guys have questions, just before we start, thank you guys for, bearing with us. This is our first webinar, so obviously the tech will be a little bit, work in progress. We still here to give you good value. We'll still share the document, the presentation after this webinar, so you can look through it. And we thank Vlad for all his expertise, and we want you to utilize that. So if you have any questions, drop it either in the Riverside chat or on LinkedIn, YouTube, whatever you're streaming from, let us hear you. So what's regulation like around the world? So regulation in the US is, Gary Gensler famously said that there won't be new securities token regulation, that security tokens that are securities need to fit under securities law, existing securities law. So South Korea did something similar recently where they introduced regulation for security token. Europe has their own regulation over there. Then you get countries like China, which are extreme in their antagonism towards anything digital asset related. And on the other flip side of that, you have El Salvador, where Bitcoin is legal tender. The central bank holds it. It has the standing, the status of what the dollar has in the United States in El Salvador. So this is a challenge and an opportunity for digital asset entrepreneurs, investors, is the shifting regulatory sands around the world. No two countries are developing at the same pace, and the world is obviously catching up and developing regulatory structures at different styles for different parts of the world. So that's something we keep an eye on. Maybe Vlad, you can talk a bit to how do you look at global regulation through your eyes as a chief compliance officer?
Sure. I think it's challenging enough States, but we are a global company and we do offer securities and our cryptocurrencies throughout the world. So what we do is we constantly assess on a monthly basis. We go through and monitor any regulations and any notices, any comments, any findings, any fines that occur outside the U.S. and in the U.S. And we kind of use that as the basis for what we're going to decide in terms of whether we remain in a particular country or not, whether we want to open up trading in a particular country or not. And unfortunately, because of the lack of clarity, a lot of it is a risk-based decision where we kind of make an assessment of the potential outcomes by either opening up something in the country or shutting down something in the country. And it's very fluid. It's very challenging. And it's a kind of a work in progress. And I can speak probably for many other certainly regulated entities in that we would all love to see more clarity, not just from the SEC and not just in the form of fines, but actual a valid, structured a rulemaking process that is supposed to exist, but seems to have taken the back burner lately in the form of just fines against entities. Go ahead, David.
Hi everyone. I'm not sure if it's just me, but is there any audio?
No, I don't hear the audio. But yeah, if you can mute, I'm gonna we're gonna try to find out what's going on. 1 second. Apologize for the audio, but we'll get it taken care of. All right. So let me uh, let me continue. Can hear me? Just somebody just in the chat, right? Yes or no? Okay, beautiful. Um, as you can see the slide, the evolution of the INX token, which as I mentioned earlier, and only fully registered token offering that was registered with the SEC started in 2017 with a vision by the founder Shai Datika to come up with an entity that was able to provide actually regulated platforms for token offerings. If you recall, in 2017, it was the Wild Wild West, tons of ICOs, tons of people raising a lot and a lot of money with little regulation. Um, as you saw in the second slide that we presented, the dominoes are starting to fall as part of that lack of regulation, whether it's through fraud or through indirect contact with entities that became insolvent. And part of the insolvency has been caused by a lack of regulation. So we filed the F1. We became the first SEC registered security token in August of 2020. Raised $84 million with over 7,200 investors across 75 countries. And in July of 21, actually listed the INX token to be traded on our ATS. And it's currently still being traded. As far as we understand it, by far the most liquid and most traded security token that's still out there. And we hope through webinars like this and through exposure and just knowledge and education that other issuers take advantage of what we offer, not just in the primary market and also a secondary market that we have in the form of an ATS. So as you see here, We have a license, a broker-dealer license. We're a member of FINRA SIPC. The ATS, which is the secondary market trading piece of our business, is registered with the SEC specifically to trade digital assets. We're one of a handful of broker-dealers that have that particular permission. The INX token is the one of the security tokens that does trade on our ATS. In addition to that, we have a cryptocurrency exchange that's currently licensed and operates in 43 states and territories. That allows you to buy and sell cryptocurrencies. We have many pairs that are available for you. And all of this can be done, which is also a unique situation that's only available through INX. INX 1 specifically, which we rolled out at the end of last year. You can register once and both trade security tokens as well as cryptocurrency all on one platform, and move cryptocurrency, convert it to US dollars, move those dollars to trade security tokens, and vice versa. We also have a transfer agent that's registered with SEC for issuers that want to do a token offering. We can provide those services, keep your books and records, do things like dividend distributions and interest payments if need be, and maintain your books and records. And we are also, we have another business that's part of the NFA member under the CFTC. That's an OTC trading desk as well. Go ahead. Next slide. All right. I think you saw the disclosure. Thank you very much. I apologize to everyone if audio problems in the beginning, but everyone here is eligible to be able to get a book. It's called the INX Way. We just recently published it. It describes everything that you need to know in taking a company to raise money and doing it via a security token. That will be available and for everyone on this particular call. And I think it's quite educational and informative. And I think one of the biggest challenges that we have as an industry, quite frankly, is to educate people. And webinars like this is exactly the reason why we need that. And there's the link to the book that you're seeing in the presentation right there. So if you go and you hit that link, you'll be able to have access to this book. It's about 50 pages or so, and is quite informative, I think. But have a look for yourself. So, okay, looks like we have a question. Okay, if a company is using a token not as a security, but as a representation of another instrument that facilitates asset ownership, like a percentage of beneficiary interest of a trust, would this fall outside the realm of the SEC? I don't think that it will fall outside the realm of an SEC. That is something, sounds like a derivative product. A derivative product is a security. But again, we would need to know more detail about that particular situation. And one of the things it's interesting and challenging at the same time, we're on many calls with issuers and people wanting to understand what the hell is a security token and how does it work and what does it mean and what are the costs. And everyone has their own little story and everyone has their own agenda and purpose in what they want to do. And the beauty of the security token, unlike a regular plain traditional Reg D, Reg S, say in the past, is that you have so much more flexibility because of the blockchain, because of our ATS, because of the fact that trades that in the past on the secondary market that used to take over a month to settle between two people can now settle in a couple of minutes. So these are all exciting things, and we're willing and able to accept the challenge. And we have actually two regulated entities that enable you to do both things, both security token trading as well as cryptocurrency trading in the regulated environment. Okay. If most tokens are considered a security, can you illustrate the outliers that wouldn't be considered one? Great question. I I think at this point and in the environment we're in, short of Bitcoin itself, I think you have to assume that certainly if you want to do business in the United States, and this is the big caveat, right? If you want to do business in the United States and you want to do it in the regulated fashion, that you pretty much need to assume that every asset that you're putting out there is going to be considered a security. It's almost as if at this point you have the you're innocent until proven guilty. Right now, the SEC has a mindset of you're guilty until proven innocent, and that's a challenge. So to that extent, I think you have to take that mindset, and I would suggest that you be conservative in that approach. So, any other questions? Okay. David, are we wrapping this up? People will have access to the presentation and to the book. The link's out there, and I think this is recorded, so we'll probably post this. Okay, where does ADA fall into the regular scope? ADA. I'm not sure what you mean by ADA. If you can expand on that. Oh, American Disabilities Act. Well, okay. I'm not sure what the American Disabilities Act has to do with a security token offering. To me, it's outside the scope. Oh, ADA, Cardano token. Okay, got it. Again, any token on any blockchain, I think should be prepared to that's doing business in the U.S. should be prepared to get a letter from the SEC at this point. So that's the simple answer. Yeah. So the majority of the tokens we just had what standards are most commonly observed for issuance. The standard that we use is the ERC 1404 Ethereum mainnet blockchain. That's been the most common venue. There's some aspects and attributes to that chain that allow you to revoke tokens in case somebody loses their private key, things like that, which is important to regulators to have security. And we adhere to that, but there are definitely other blockchains that have that functionality that we're exploring and looking to offer. However, again, the majority, the few that are out there, the majority of them are on the Ethereum blockchain. So, is UTX model like Bitcoin? Okay, you know what? Let's do this. We'll accept. We'll take your questions, and we will try to address them. I guess in some fashion at some point, and then perhaps you guys can ask the questions in the Telegram of the company, and then we will try to address those on a case by case basis. I think it would make a lot more sense for people to read the INX way and see what it says. Perhaps it will answer some of the questions you have, and then if you have additional questions, then let us know, and we will definitely be happy to address them. We also have on our website a means by which you can communicate and submit questions as well there. So feel free to do that as well on inx.co.